this spring we're around 3,400 active listings. And so more sellers are coming into the market, which for buyers should be a good thing, that you're not having to compete.
Hey there, everyone. Jamie with Sell for 1% Realtors, joined by our friend Rich Cercone at Equitable Finance at Broker Day Barlow as well. But Rich, you have a market update for all the people looking in the market as to what's going on, interest rates and home buying. I want to see if you could let our followers know what's going on in the market.
Thanks, Jamie. Actually, June has been a very kind month to interest rates. Not that we've seen a dramatic shift down, but we stopped the bleeding and we ratcheted down a little bit as we went through June. We had an early in June employment number that was worse than expected, which is good news, the interest rates. And then all of the inflation data throughout the month of June has been less inflationary than what the market had been anticipating. So in general, we're seeing better inflation numbers, higher unemployment numbers. All those things are good for lower interest rates. And I think right about now, we did get I forget what the number was this morning because I was off to a closing, but I think it was the PCE inflation number was weak this morning, weaker than expected. So again, further helping that narrative of lower rates. So what I think the market is doing right now is hold our breath, get through the 4th of July. Let's see what the unemployment number is next Friday. I believe it'll be next Friday with 4th weekend. Maybe it might be the Friday after. I haven't looked. And then, what the other numbers come up looking like. So that is where we are right now. Interest rates in general, I locked a loan this morning, 6.875. It was a nice size loan with 25% down. So that gives you some idea of where the 30-year fixed rate is. They had excellent credit. Had they had a little worse credit, it might have been 7%. And so that's where we're in the high sixes, maybe low sevens. And then again, as I've always said, the lower loan amounts, we're down in the 6.3 range on the lower loan amounts. And the government loans, the VA and the FHA loans, are both very favorable. The government loans are in the low sixes, 6.25, 6.125 on a VA or FHA loan. So that's kind of an update of where we are with rates right now.
That's cool. So we're seeing interest rates ease a little bit as inflation maybe is subsiding some according to the government numbers, and as the workforce is maybe lightening a tad.
Right.
Do you see anything? I mean, what was the latest indication from from Jerome Powell as to any interest rate cuts coming, or what's the thought process there?
Well, he hasn't spoken for a while, but he seemed to back off of his hawkish stance the last time he spoke. And the market is interpreting that where, early in December, we were thinking 3 rate cuts in 2024. Right. By the time we got to March or April, they were thinking no rate cuts. And by the time we got to early May, they were thinking rate increases. So we're back to thinking that probably we get a rate cut late in the year and probably 1 or 2 rate cuts in 2025. That's kind of what the market sentiment is right now. And Mr. Powell hasn't spoken for a while. We'll wait to hear from him again soon.
Well, you always have some governor from, one of the regional banks. It's,
right. Yeah, one of the some governors will, they'll get on CNBC and pop off about something. And some of them are hawkish, some of them are bullish, and you just, you just never know what type of a statement you're going to get from those guys. You're correct.
So one of the things that we're seeing right now, Rich, is a increase of listings into the MLS. We're about 1,000 listings more this year than we were last year. We were hanging around 2,400 active listings last spring. This spring, we're around 3,400 active listings. And so more sellers are coming into the market, which for buyers should be a good thing, that you're not having to compete maybe like you were a year ago to be able to purchase a property. And when we combine that with a little easing of interest rates, because about a year ago, I think interest rates were around 7.25%, 7.5%. So I think we're lower than we were a year ago. So it's a good time for a buyer to think about maybe getting back into the market if they came out of it, or for those buyers that are actively looking, it's a good time as well.
Yeah, I can distinctly remember last summer because I'm thinking of clients that I was speaking to. They were looking at houses in the July range last year, and we were solidly 7.625, 7.75, and they kept backing off, thinking the rate was too high. So we're almost a full point lower than we were a year ago, and a lot of people don't realize that.
Well, and that full point makes a big difference in your house payment.
Yes.
Yeah. And one of the things that we hadn't talked about in a while are those 2-1 buy down programs that are still out there. And that if a seller, I'm seeing information where, instead of taking a $10,000 deduction, on the price of the home, put the $10,000 towards a rate buy down, a 2-1 buy down.
Right.
And instead of saving 60, 70, 80 bucks a month because you were able to negotiate the price down 10 grand, you're actually going to save $500, $600, $700 on the rate buy down.
Right. For those who don't know, a 2-1 buy down means that, let's say that your 30-year fixed rate is 6.875. What that means is that in the first year, your rate would be 2 points lower. It would be 4.875. The second year would be 5.875. And then by the third year, it's 6.875 for the remainder of the loan. So you have a 2-point relief in the first year, 1 point the second year. And the nice thing about the 2-1 buy downs also is that the seller pays those, as you said, the seller would pay the cost of the buy down, and it's put into an escrow type of account. And if the buyer can refinance or happens to sell the house within those 2 years, any unused interest is returned to the buyer when they pay the loan off. So they don't lose that money. If you just do a straight, buy down of interest rate and then you refinance in a few months, you lose that money. But the 2-1 buy down, you do not lose it.
Ah, that's a benefit I didn't know about. That's cool.
Yeah.
All right, Rich. Jay Marinsky, what do you think?
Yeah, I think you guys are hitting the nail on the head, as they would say. It seems like market is shifting from more of a seller's market to more of a neutral market where buyers have a little more options when going out to look at a house. And I think it's an important point Rich made that, this time last year, rates were nearly a percent higher. So that definitely is some relief for buyers getting into the market.
All right, guys. Well, thank you for the conversation. Rich coming out of a closing, sitting there in his car, enjoying the morning.
Yep.
Appreciate you jumping in and talking rates with us.
Thanks for having me, guys.
So our contact information is right here on screen. If you like this information, be sure to like and subscribe and check off that notification bell as we provide more information, hopefully every week, that you'll get a good handle of what's happening with rates in the market and so on and so forth. Here in Columbus, give Rich a call if you're looking for a loan. He is the man to get you from today to a closing. And if you're looking for help in purchasing, give Jamie a call. And of course, if you're looking at selling a property, I would be the man to give a call to. So again, guys, thanks for the conversation, and we'll look forward to talking to you next week.